Kohler Revolution 360 with continuous clean. Stays clean 5 times longer.
It's okay, Dad.
Only from Kohler.
Can you customize the S&P 500 to meet your client's growth objective? Only Sector Spider ETFs can divide the benchmark into 11 investable pieces. This allows you to underweight sectors like real estate and utilities and overweight sectors like technology. Sector Spiders, write your next chapter in investing. Before investing, consider the fund's investment objectives, risks, charges, and expenses. Go to sectorspiders.com for a prospectus containing this information. Read it carefully.
Yeah, I consulted with your grandmother's doctor. We can do the screening at her house.
Hi. This is the man who's going to check your eyes, Grandma.
Cognizant AI solutions are helping healthcare companies advance diagnostics and prevent blindness in patients with diabetes.
Everything looks good. You have beautiful eyes.
At today's Best Western, stay 2 nights and get a free night for your next stay. 1 night, 2 nights, free night. Book now at bestwestern.com.
CNBC's elite list of disruptive innovators is back.
We're trying to build the Amazon Prime of rental.
Nominate your company for CNBC's Disruptor 50. Go to cnbc.com/disruptors. Deadline extended to February 21st.
Welcome back to Squawk Box. Time now for the Executive Edge, and we're going to run through some of the big earnings movers right now. I want to talk about Dropbox because their shares are up sharply. The data services company's fourth quarter earnings beating estimates by 3 cents, and revenue was also above expectations. Dropbox also beat on 2 key metrics, paying users and revenue per paying user. The stock briefly topped $21. That's the price from its 2018 IPO. It hasn't closed above that price since September. Also, take a look at Fitbit. Fitbit shares falling. The wearable device maker reported a loss of 12 cents per share versus expectations of earnings of 3 cents per share. Now, holiday sales fell more than 12% to the lowest fourth quarter total since the company went public. Remember, Google agreed to acquire Fitbit for $7.35 per share back in November. It expects to get regulatory approval this year. Interestingly, they sold more Fitbits, but actually just at lower margins. That was part of the conundrum.
Also, First Solar shares dropping sharply. The company reported an unexpected loss in the fourth quarter, and revenue came in well below analyst expectations. First Solar also announced that it's working with advisors to review options for its U.S. product development business line to focus on its core business. That stock right now down by about 16.5%. Then check out shares of Texas Roadhouse. They're climbing after the restaurant chain beat estimates for earnings and revenue. Comp store sales for company-owned restaurants grew by 4.4%. And the CEO said that comp sales for the first 7 weeks of this year grew by 6.4%. The company's also hiking its dividend by 20%. And right now that's good for a 7% gain for the stock.
All right, coming up, a new proposal from the NFL means fans could be getting an extra game per season. Details are next. As we head to break, here's a look at yesterday's S&P 500 winners and losers.
That was wonderful.
Bravo!
I loved that.
Oh, it was great.
Well, it was pretty good.
Well, it wasn't bad.
Well, there were parts of it that weren't very good, though.
It could have been a lot better.
I didn't really like it.
It was pretty terrible.
It was bad.
It was awful.
It was terrible.
Get him away!
Hey, boo!
Boo!
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow at TuneIn and always be in the know.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Giving you a nice big edge over your competition. That's the power of edge-to-edge intelligence.
At FrontPoint, we believe smart home security should have it all, and now it does. Introducing the all-new FrontPoint security system, the new standard in home security and automation. Simple enough to install yourself. Safe enough to set the alarm with your voice.
Alexa, tell FrontPoint to arm my security system.
And smart enough so you can control it all, right from your mobile phone. FrontPoint Smart Home Security. Safer, smarter, simpler. Visit frontpoint.com and get 20% off plus a free indoor camera.
It's just a quarter, right? But what if Acorns automatically saved that quarter every time you bought coffee for a month? What about a year? 10 years? And what about the change from food, movies, parking, gas? What about the change from everything you buy? And what if Acorns invested it all in the market where it can grow through the power of compound returns? What if you didn't have to change your life to change your life? Then it's not just a quarter, is it?
What would you ask the world's greatest investor? Monday, it's your questions and Warren Buffett's answers. Use hashtag AskWarren. Becky Quick and Warren Buffett, 3 full hours. Monday on Squawk Box. Watch and listen live on the CNBC app.
Hey, Guy. Welcome to HIMSS.
Should have done it years ago, and I feel like the young stud that I always imagined I was.
Outstanding product. Works above and beyond our expectations.
Go to forhims.com/ED and get started with a free online visit.
All of my patients should have a Dexcom because it's just more information. Why wouldn't you want that?
Being able to see your numbers in real time gives you the knowledge to see the future. It's awesome.
Dexcom showed me that I was doing a dip and then a spike in the middle of the night, which allowed me to adjust my basal rates. I'm not waking up in the middle of the night and my numbers aren't going crazy.
Now you are in control, and that is so powerful.
Hey, Guy, ED issues? We got this. Today's your day.
From the NASDAQ market site, call me maybe. U.S. equity futures at this hour. Let's show you what's going on. Friday morning, it looks like the Dow would open down about 130 points down. NASDAQ off about 56 points. Got the S&P 500 looking like it would open off about 16 points after yesterday's little, I don't know what we'd call that. It was like something tantrum, like a midday tantrum.
Yeah,
or something.
when I first saw the story, I'm like, we wrote a story. The market was down like 140 points. We wrote a story about
it was down
this,
to 300.
But right, when you read the details and see that it was down like over 380 at one point, and it dropped so rapidly.
It looked like it was. It looked like it was like headed south.
Right.
Yeah.
Let's bring you up to date on a media deal. I don't know if we're going to call this a media deal. I'm going to call this a tech or telecom deal is what I think I'm going to call it. Sprint and T-Mobile have now agreed to amend their merger agreement to give T-Mobile's majority owner, Deutsche Telekom, a higher ownership stake in the combined company. Now, this is due to the erosion of Sprint's value during this very long deal approval process. Sprint's parent, SoftBank, will hold 24% of the combined company. Deutsche Telekom will now hold 43%. They plan to close that merger. At least the goal is by April 1st. And that's not supposed to be about April Fool's Day. But what had happened, obviously, was Sprint. The Sprint business over this past now close to 2 years has been decimated. One of the reasons that they argued to the government that they needed to do the deal was because the business was in such disarray, frankly, and what could ultimately happen to it. And so, effectively, Deutsche Bank was fighting for a bigger share of it, or effectively the equivalent of a higher price.
It was interesting, though. That
SoftBank's giving it up.
It's just you can have more of it.
Right.
We're not going to change the pricing structure. You could just have more. And if it's turnaround, you
and
get a bigger
SoftBank's giving it.
Right.
Not the rest of the shareholders.
Right.
There are also these built-in provisions where SoftBank actually gets something more if there's actually performance. So
they'll get some of the shares back, or they'll get a larger portion of the.
I believe they get some, not shares. They get. Maybe there's new shares that are issued. They get a little bit more later, but there's a whole performance kind of piece set to this. This, by the way, has been going on.
So it depends on how Marcella is able to improve the business, or what happens.
So Marcella is no longer at Sprint.
What happened?
And so neither is.
He's at
He's at WeWork now. So we'll have to see what happens to this combined company. That's going to be a big question. I don't know.
I was. When David was telling us last week about the renegotiation taking place, it's like hard to imagine. Like, okay, you've already done all this. How do you renegotiate? This seems like the only way that really makes sense.
But they've been trying to. They were going to renegotiate this anyway.
But this is a way that makes sense, right? You're not changing the deal. None of the other shareholders are going to have to change their deal with it. It's just changing the risk reward structure.
And this probably would have happened earlier had they just. Part of this was just waiting on the judge. So.
Media deal. No, media deal. I don't get it. I don't even see how you could. I get AT&T. If you know what I mean?
Oh, describing
it as a media.
Okay, yes.
What world is anyway? The NFL has released some new terms for its proposed collective bargaining agreement. It includes bigger pay increases, a larger roster size for players on the practice squad, as well as an additional regular season game each year, and a reduced preseason, which no one in the world would say, oh, don't reduce the preseason. The NFL players still have to approve the deal. They're expected to have a phone conference today to discuss the proposal. The union is expected to call a vote ahead of its annual meeting next month. This is the NFL. Major League Baseball's got some unbelievable weird proposals that we should delve into
like what?
One of these days. I don't know, that the winning team gets to pick its opponent or something during the playoffs. What? It's just bizarre. The ways to make the game go faster, and you know what they should be dealing with.
Yeah, let's talk about signaling and what happens if you're cheating.
And what do you do with
and you get to keep the World Series title.
Right. And he said it's just a piece of metal or something. And
what, the trophy?
Yeah. And that there will always be an asterisk.
It's the records. There will always be an asterisk. But where are the repercussions for that?
And what's going to happen this season when pitchers appear to be throwing at these guys, and they're really not, maybe they're backing them off the plate, throwing inside or whatever, but there's going to be the perception, so everybody's going to be totally worried about whether they're getting thrown. I don't
know how you erase this.
We need a Major League Baseball.
This is worse than the Black Sox.
Maybe we'll get Rob Manfred on, and ask him what he should come on.
We should.
And he should come on, and he should. We should have a little mea culpa or a little, what was he thinking? What were the? Because he's getting a lot, especially if you look at ESPN or some of the other sports centers, they're talking about this constantly about the ESPN.
It's a big deal, and they haven't addressed it or.
Well, guys work 162 games, and they pour their heart into that to win that crummy piece of metal. So. Probably.
It matters.
And it's baseball, American pie, and hot dogs, isn't it?
I think we should get him in. I think we should get him in with Adam Silver, and we should also talk about media rights and business. There's a lot going on.
It doesn't.
Hey, there you go. I mean, taking it back to business, the media.
That's what we do. Yeah. That's the business. That is the business. Coming up when we return, the NASDAQ sitting near all-time highs. We're going to talk about the big names that are sending that index soaring next. And then later, you don't want to miss our guest host, I should say, for the 7 o'clock hour. St. Louis Fed President James Bullard, never one to hold back. I promise he'll make news. And a reminder, you can watch or listen to us live. You can go right now onto the CNBC app. We'll be right back after this.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under your new episode section. Happy listening.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Land Rover, above and beyond.
At Fidelity, online U.S. stocks and ETFs are commission-free. And when you open a new brokerage account, your cash is automatically invested at a great rate. That's why Fidelity leads the industry in value, while our competition continues to talk.
Interactive Brokers charges 3.06% for a $100,000 margin loan. Do you know how much your broker charges? Upwards from 7.82% at Fidelity or Schwab, to as high as 8.5 to 8.75% at Ameritrade or E-Trade. Move your account to Interactive Brokers and save at least $4,700, or much more if you're trading big bucks.
There's nothing standard about you, so get the new standard in home security and automation. Introducing the all-new FrontPoint Home Security System. So simple, you can install it yourself. Control it with your voice.
Alexa, tell FrontPoint to unlock the door with 3791.
And with your smartphone, too. We monitor your home 24/7 from burglaries and emergencies. Visit frontpoint.com and get 20% off plus a free indoor camera.
A hard 20 after a hard day isn't for everyone. Waking up before the sun isn't for everyone. But at $58 a month, Peloton is for anyone.
who wants it.
New York State is taking business to the next level, supporting innovative companies that will shape tomorrow, and building workforce development and tuition-free college programs to generate the talent companies need. With a $150 billion investment in state-of-the-art modern infrastructure and a nation-leading commitment to low-cost clean energy, New York is doing more than any other state to build for the future of your business. New York State, the state of the future. Learn more at esd.ny.gov.
Hey, I'm Alex.
The noob. Enter. Come around here. I'll show you how we do things.
Perfect.
Oh, you got your basic productivity suite here. You got your email. You got your company portal, production portal, sales app, and social. My avatar's a manticore. The HR sites. Put your hours there, PTO there. Payroll's a different beast entirely. Cloud storage, doc storage, which require a 15-digit passcode changed every 9 days.
So how do you get anything done around here?
Oh, for that we use Smartsheet.
Great.
Get right to the work that matters with Smartsheet.
From Brooklyn, New York, the most influential voices disrupting the next decade of work. April 1st and 2nd, CNBC's At Work Summit presents insight from top business leaders, helping you empower the modern workforce, boosting productivity and the bottom line. To register now, go to cnbcevents.com/work.
When the wealthy struggle to sell their dream houses, it's Aaron Kerman's job to show them that beauty is in the eye of the buyer.
We need to make sure this house feels like a house and not a club.
Listing Impossible, all new Wednesday, 10 Eastern. CNBC, get yours.
Facebook, Amazon, Apple, Microsoft, and Alphabet. They have been leading the way higher. Joining us right now to discuss whether the index growth is too dependent on just a few names, Paul Meeks is here, portfolio manager, investment committee member of Independent Solutions Wealth Management. Also with us, James Kakmak. He's the partner at Clockwise Capital. Good morning to both of you. I'll start with you, Paul. There's a lot of people on the skeptical side, on the bearish side, who say, you know what? The index is now so overweighted. I think it's close to, 18-20% now in terms of the S&P 500, that it's so dependent on tech. If something goes wrong or if even the mood changes, the mood much more broadly will change. What do you think of that?
I think you're absolutely right. And if you peel back the onion for someone like me who invests only in technology stocks, you take a look at tech-specific stock indexes, such as the SPDR tech sector, ETF, XLK, and that has about 70 names in that particular index, and 40% of that index is in just two of those names, Microsoft and Apple. So yes, the concentration is worrying, and particularly of those two, I worry about Apple. Microsoft, I think, is going to be okay, but Apple, I think there was way too much in this stock price based on a 5G supercycle, which I'm much more skeptical of than most.
I want to talk about both issues. First, let's just talk about the broad issue for a second. The implication, though, of the overweight relationship of these tech companies, there's nothing much you can do about it, right? I mean, you can have these fears. We can all talk about these fears, but there's nothing, unless you have some other idea I don't know about.
Yeah, no, I think what you would do is, I'm a tech sector, and I tell people to be very careful investing in me or in any tech sector product. We can all take a look at the tech sector focus, and what you mentioned at the outset is true, but now there are 11 sectors that make up the S&P, and we also have communication services, which you have to include. And you also have to include some of the major consumer discretionary names like Amazon, and so the black and white technology sector exposure is actually less than you think. So you just have to take a look at portfolios and make sure that, if I was to give you a baseline, I would say make sure your portfolio is not more than about 20% tech. That's your stock portfolio.
James, what do you think of that? Is 20% the right way to think about it?
I mean, look, we have the increasing amount of the market explained by a narrowing set of companies, and we think that there's a handoff taking place. Now, when you look at technology's evolution, we're talking it evolves in very long cycles, about 50 years. And we think a handoff is taking place where the last 25 years were about building out the internet infrastructure, and the next 25 years will be about how do we utilize it to improve productivity and time savings. The analog we derive is back to 1910, actually, with the railroads, where you actually saw 70% turnover in the Dow components for 2 decades, moving from industrial companies to consumer companies. So when we look at the tech sector right now, we think that the established companies, because of this transition, will be laggards, while new emergent opportunities that leverage what the establishment has built.
Like who? Give us an example.
I mean, we look at, you have, obviously, from the big tech, I think Amazon and Apple continue to be able to leverage their infrastructure. But then on the smaller side, you have companies like Slack, like Shopify, like Zoom that are building out. And you just reported Dropbox, for example, building on the cloud. These are companies that are leveraging.
So you're of the view that a decade from now, the 3 companies you just talked about, I mean, I don't want to put words in your mouth. You think they'll be bigger than Amazon?
I think Amazon and Apple, we carve those 2 out. But when you look at the $1 trillion club, I think that they will be laggards. They won't necessarily be eclipsed, but we have to look at, what is the transition going to take place, where which companies will outperform over the next decade. And I think through that lens, I think that's highly probable.
Okay, let me ask Paul this. Part of this, though, is a regulatory issue. By the way, in 1910, well, later, I should say, 20 years later, we had antitrust rules. We had antitrust enforcement in the United States. I'm not arguing that that's really happening, or right now it's not happening. There's a lot of talk about it. Paul?
Yeah, I think that there will be some hell to pay, particularly as what you're seeing that's starting, frankly, in Europe and coming to our shores about tighter regulations for privacy around social media, artificial intelligence. But I have to disagree with the other contributor in that as we build out this world, which he's talking about, a world of Internet of Things, there will be very big roles for some new Internet of Things component suppliers and some that are coming on the scene. So I don't know about if the FANGs are going to still be preeminent, but some of the component suppliers that exist today will be even bigger if this theme works out as he's talking about.
Okay. James and Paul, thank you guys. Nice to see you.
Thank you.
Have a good weekend.
All right, coming up, we're talking to one of the top venture capitalist investors in the space arena. She's going to tell us what she thinks of Virgin Galactic's meteoric rise and maybe where else to invest. We're coming right back.
Check ignition and may God's love.
Don't forget to subscribe to our podcast. You'll get interviews, original content, and behind-the-scenes access. Look for us on Apple Podcasts or on your favorite podcast app. And subscribe to Squawk Pod today.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
When you're not listening to your team, take it to the end zone, the rim, or the net. Keep up with the biggest moments in sports by following TuneIn on social media.
Block, Cook into the end zone for the touchdown.
From reminders of the live top games to tips of the best sports stations and podcasts.
Welcome to Undisputed. We are live from Los Angeles. I'm Jenny Taft here with Skip Bayless.
Follow and TuneIn on Facebook, Twitter, and Instagram to get the most out of TuneIn.
How's the IT department liking the Now platform?
Every time it takes care of something for us, we celebrate.
How often does... Got it.
ServiceNow, the smarter way to workflow.
When it's time to sell your home, there's a lot of money on the line. How can you trust your real estate agent will get it right? There's good news. With HomeLight, you can compare actual performance data on thousands of agents near you, so you know who sells quickly, who sells for the best price. We'll match you with the perfect agent for your needs. And best of all, it's free. Sell your home for more money. Go to homelight.com today.
Virus fears, market volatility, and the impact on your money. Time to buy or hold. Strategies ahead of the first trade on Squawk on the Street, 9 a.m. Eastern. Today, watch or listen live on the CNBC app.
Once upon a time, being middle class meant you could afford to live a comfortable lifestyle. But these days, it often means being up to your ears in credit card debt. If you owe $10,000 or more in credit card debt, here's something that might surprise you. There are secrets the credit card companies don't want you to know. Secrets on how to completely resolve your debt and become debt-free. Imagine the thousands you could save. To unlock these secrets, request free information from Credit Answers. Just call 1-800-339-5112. We're not talking bankruptcy or debt consolidation. This is your chance to settle your debt for a fraction of what you owe. We even offer a guarantee, so there's no risk to call. Unlock the secrets credit card companies don't want you to know. Within 5 minutes, we'll show you how our program works and how much money you could save. Credit Answers, your answer to overwhelming credit card debt. Call 1-800-339-5112. 1-800-339-5112.
Snapped its 8-day winning streak, but the gains so far this year have defied gravity, gaining more than 220%. Lisa Rich is managing partner at Hemisphere Ventures, an early-stage VC firm that invests in software, robotics, and space companies, including SpaceX. And you have a different, objective than like a hedge fund or even private equity or even a mutual. You want to own stories. That's what you do. You may never see a profitable company, or maybe it's 5 or 10 years down the road in your portfolio. So you don't immediately say, wow, this is unfounded with Virgin Galactic. This is something you really like that's happening because you were there early, right? As a seed investor.
Exactly. You have to come in and see what the future holds and what is in that crystal ball. And I do live in the future, certainly, with the early stage companies I work with. They have this long-term vision, just like Virgin Galactic does. While they're doing these flights and early opportunities for tourism are there, they have this long-term view of hypersonic travel. And that's exciting. So we'd love to see the early opportunity for flight, making them some money so they can achieve that goal of hypersonic travel for the rest of us.
So, Lisa, the volume in Virgin Galactic, suddenly you see what's happening, and there's 135 million shares trade or change hands, 7 times the daily average. So you know what's happening. It reaches a sort of a story stock, almost a frenzy, and you know that it may or may not be based on anything fundamental. Do you sell at that point, or do you just ride it? I mean, that's what you were hoping for when you invested in it, and you're early. But when do you exit these investments? Not when we actually have a commercial space station up in space, right? I mean, that could be. I don't know when that's going to be. Would you exit any Virgin Galactic after this run up?
Well, I think that the run-up is just getting started because you've got people that want to be a part of the space industry, and they can't buy SpaceX, and they can't buy Blue. So this is an opportunity to be a part of something. Right. And so there's that sense of ownership and I think pride that people have in their investments. And they want to be a part of the space industry, and Virgin Galactic is giving them that opportunity.
It's exciting for you, and you have a great job because you can invest in things that we have no idea if they ever make money or they're ever going to play out, and you spread it across a lot of different companies. I'm sure. How much are you working with at the VC firm that you're part of?
We're a small firm. We're very early stage, and I think you've found us because we have companies that are getting a lot of traction, like Axiom Space. I mean, when you're working with a company that's building the world's first commercial space station, people take notice.
Right. So how much money did you actually put into Axiom? That's a Texas company. I know Cornyn has made some comment. So what you would start with, I guess, is an attachment to the space station that's already up there, right? But it would be commercial in nature.
Exactly. So it's a module that's going to be built on the port that NASA has given Axiom Space exclusive rights to a port, and they will build that module on top of the existing ISS. So when the ISS is decommissioned, it will disappear, it will be deorbited, and we will have Axiom Station take over as a commercial destination and the only destination in space. So it's primo real estate.
Right, but you make an investment and you're comfortable that what would an intermediate term investment be for you? 10 years?
Right. So most of our early stage investments are looking at the 7 to 10 year time horizon. And when you make an early stage investment, you're looking at a company that you believe will be able to reach this magic $100 million in revenue per year number, right? How long will it take for them to achieve $100 million a year in revenue so that it could potentially be acquired or IPO? And so what's interesting about the space industry is that you can have early stage companies that could achieve that earlier than 10 years because the scale and the revenues come in very quickly, very fast for companies once they achieve their early milestones. So for a company like Axiom Space that's selling tickets to the space station for $55 million for a 10-day trip and a 4-month experience of training, you can achieve revenues early. And that's what we look for, is companies that have early revenue opportunities because they need to survive long enough to achieve those revenues and be acquired or go public.
Right. Yeah. I mean, you're in the very early rounds, and it is great. You may get something for $1, and then later rounds still a VC or at $100 or whatever. Do you know what? Can you tell us what what are you in Virgin at? It's at 37 a day. Can you tell us what do you have something?
The stock market. I didn't invest in Virgin Galactic.
Oh, you did. Okay.
I'm familiar with the company, and I think George Whitesides has done a fantastic job, by the way, of building the community of Virgin Galactic ticket holders. I think that, and there are many other companies that have come to me recently looking to do space tourism. They're very, very early, so not we're talking, the non-billionaire class of entrepreneurs starting companies and saying space tourism is going to be a thing. Let's look at that opportunity.
So how much do you have in SpaceX right now?
In space, we don't disclose our numbers. I would just say, we're early.
Bigger than a breadbasket?
We're early investors.
Okay.
Right. I mean, we're not in the billionaire class, so we're investors, and we help other investors like the bigger VCs understand the venture environment.
Okay.
For space, because they have billion-dollar funds or $500 million funds, and they have very specific models they have to follow to make investments.
Okay, Lisa. All right, Lisa, thank you. I appreciate it. We're playing the Earth's moving under our feet here, so I guess we have to go.
Back and tumbling down.
Right.
When we return, we have two sitting Fed presidents joining us today. James Bullard will be with us for the 7 a.m. hour. He's guest hosting. And Raphael Bostic will be here in the 8 a.m. hour. We have a lot to talk about them about, including the Fed's next move, coronavirus's impact, negative interest rates, and much more. Plus, a little later this morning, Ian Bremmer will join us with a big warning on the impact of the coronavirus on the global economy. This is Squawk Box. Stay tuned.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under Your New Episode section. Happy listening.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Apps are used everywhere except work. Why is that? Is it because people love filling out forms? Maybe they like checking with their supervisor to see how much vacation time they have. Or sending corporate their expense reports. I'll let you in on a little secret. They don't. By empowering employees to manage their own tasks, Paycom frees you to focus on the business of business. To learn more, visit paycom.com.
When we started our business, we were paying like an arm and a leg for the postage. I remember setting up ShipStation. I think it was just like 1 or 2 clicks. Everything was up and running. I was printing out labels and saving money.
ShipStation saves us so much time. It makes it really easy and seamless. Pick an order, print everything you need, slap the label onto the box, and it's ready to go.
Our cost for shipping, like, we're cut in half, just like that.
ShipStation, the #1 choice of online sellers. Go to shipstation.com/TV and get 2 months free.
Carl and Alan have a lot in common. They're staying at the same hotel, with the same outdoor space, the same pool, the same hotel experience. But there's one big difference: the price. You see, Carl found the hotel on his usual website, whereas Alan used Trivago to scan hotel deals from the major booking sites and save $30 a night. Carl, try Trivago next time. Hotel Trivago.
I believe ETFs are a great way to invest in the market. I just don't believe in market cap-weighted ETFs. My research shows how fundamentals can lead to performance, and that's exactly how WisdomTree builds their ETFs. To me, it's a better way to invest. Legacy ETFs that track the market? That's yesterday. Modern alpha ETFs built for performance? That's WisdomTree.
Carefully consider the fund's objectives, risks, charges, and expenses before investing. Obtain a prospectus at wisdomtree.com. Read it carefully.
Hi, Sharks. Nothing's gonna stop me. I will make you a millionaire.
We have a deal! This is the best day of my life.
Shark Tank, tonight starting at 7:30 Eastern. CNBC, get yours.
Good morning and welcome back to Squawk Box here on CNBC. I'm Joe Kernan along with Becky Quick and Andrew Ross Sorkin. U.S. equity futures at this hour have come back a little, down about 125 points on the Dow. NASDAQ down 53, S&P down 15. It's a rough session yesterday, so we're adding to some of the losses, but the stock market did pair those losses yesterday when we were down almost 400 points to, down 150 or so, now down another 130, so we're back down about 380, or so.
All right, we've got a big hour ahead and a lot of Fed speak with us today. Just yesterday, Steve Leisman spoke to Fed Vice Chair Richard Clarida, who questioned whether the markets really expect a rate cut later this year.
What I prefer to do is to also look at surveys that many folks do of market participants about what they think we're going to do. There's obviously a probability of outcomes, but I don't think when you ask folks, they're pricing in that rate cut now, even though market pricing might suggest that.
We are joined this morning by St. Louis Fed President Jim Bullard to talk about the economy, emerging risks, and the outlook for interest rates. And it's great to have you here, Jim. Thank you.
Great to be here, as always.
Steve Leisman is with us as well. And Steve, it's great to see you.
Even
Welcome
better.
back.
Yeah, it's great.
Welcome back. Jim, let's talk a little bit about what we heard from Rich Clarida yesterday and just how you see the economy right now. How are things shaping up? How do you handicap what's happening with the coronavirus? What are you doing right now to really try and gauge the economy?
Yeah, on that clip there, Rich was talking about market pricing for rate cuts. I would describe that as a peso problem. So there's a high probability that the coronavirus will blow over as other viruses have, be a temporary shock, and everything will come back. But there's a low probability that this could get much worse. Markets have to price that in, and that drags the center of gravity down a little bit. But if this all goes away, then I expect that pricing will come back out of the market, and we'll be back to the on-hold Fed scenario.
Is that a description of your own kind of expectations of what happens?
Yeah, I think the base case is that this will, as other viruses have dissipated, this one will also dissipate. But you never know. This could be a little bit different, could turn into a pandemic. You're not
It'd be good to know exactly how long SARS lasted, not the severity of it, because it wasn't nearly as severe. And MERS, as well as the other one. We talked about SARS for a long time, and we've only been talking about coronavirus for how long, 6 weeks?
Yeah, we looked at some charts. I would say, something like 45 days, you could actually see effects in U.S. markets without doing any special analysis or anything from these other virus episodes. And I think it was the same thing. The market is worried that it's going to turn into something more serious, but then it all goes away and then everything returns to normal.
In the past,
yeah.
Hopefully it happens that way again.
But Jim, what the market believes down the road is not a problem for you until you kind of get up to it, right? Which is when you look at the probabilities right now, it's kind of interesting. After Clarida spoke yesterday, the probabilities actually rose. So while the stock market seemed to say, you know what, maybe they're not going to give us that rate cut, the bond market seemed to double down on it. We're looking right now at a 51 or 52% probability of a June rate cut, at least in the futures market. Is the market off sides on that in terms of what you think about where rates are headed?
Well, I mean, if under what scenario, you got to put these scenarios out there. If you think that this virus is going to dissipate and then we're going to have a temporary shock and then everything's going to go back to normal. Yeah, I think the Fed's in great shape, and we don't have to lower rates in that scenario. A lot of the news on the U.S. economy has been good in the last couple of months, and I've been arguing that we're in good shape for a soft landing in the U.S. economy. Tracking estimates of GDP in the first quarter hanging right around 2%, 2.25%, something like that. So that sounds to me like, at least as far as the assessment that we can make as of today, we're not going to see a major impact on the U.S. But, of course, you never know. It could get a lot worse.
And if we got a soft landing, how long could that extend this positive business? God, these shots are so bad when someone sits here. Anyway, let me go here. How long could that? How long could that extend the current business cycle we're in then? We could be like Australia-sized someday.
Exactly. Australia went 30 years, so,
And still going.
It's still going, yeah.
Does it make sense to you when you see the 10-year Treasury trading below 1.5% this morning? I think it's at 1.49.
Yeah, so I have been concerned about yield curve issues. I would say the 10-year, 2-year, though, is not inverted. So this is kind of a level shift for both.
But it's way down, right? It's half of what it was. It
is way down. Again, I think some of this pricing will come out if the coronavirus fades in the future. So I want to see how that plays out before I get worried about yield curve issues.
I don't know if this is an easy or hard question to answer, but how do politics play, or how does an election year play into the way the Fed thinks as things may move or not in terms of what people's expectations are?
Well, we have to react to the economy, and I think if you look at past committees, we have made moves up and down during election cycles. So I think this is kind of this always comes up in the election cycle, but I don't actually think it affects the committee's deliberations that much.
Even also, the reverberations.
I do not think that you can win an election based on whether the central bank zigged or zagged.
No, but
but you can lose one. George Bush.
I don't really. When you read the political science on it, they never talk about what the central bank did. They always talk about the failure of the candidate.
Okay, but let me ask you a question.
I think there's a problem with read my lips.
I think there's a view. I don't know if it's right or not, but that if Bernie Sanders becomes the Democratic nominee and there is an expectation or greater expectation that he would have a chance of actually beating the president, that would have an effect both on the real economy, but in the immediate term on the stock market, and therefore
I'd like to get your sense of this. My sense is Wall Street is pricing in divided government, and Wall Street likes divided government. And I think for now they're pretty confident it's going to remain divided, so they're not too worried. And I think that's where the pricing is right now.
Jim, could you come back to the coronavirus? How would a 1/4 point rate cut cure the flu?
Huh?
The market has this built in. I'm sorry, I'm being a little bit, have a little bit of fun with it, but the market has built in, taking what you said at face value.
I don't know.
Coronavirus hits and hurts the economy. The Fed reacts with some form of a rate cut. Would a rate cut do any good for the U.S. economy in that context?
Well, I mean, you get a cold, you maybe drink more orange juice than you would otherwise. Does that cure the cold? Probably not, but it treats some of the symptoms. And, there would be clear symptoms coming from a slow China that took a long time to recover from this. That would slow global growth, and that would come back to affect U.S. companies. And so I think it might help a little bit.
I guess I'd push you a little bit more. If the problem is a supply problem, Chinese supply declines because they've shut down. Does lowering interest rates in the United States solve that supply problem? And I should have been upfront with that question.
Clearly not directly, but you might mitigate some of the implications of that for the U.S. economy.
Jim, what do you hear in your district specifically, just in terms of what's happening on the economy? We'd kind of been waiting to see what happened after the trade war. Looks like we've got a truce. Does that change? Has it changed any of the economic reports that you're
I would say, to the extent we have a lot of logistics and transportation, that's somewhere where you see a lot of numbers that, don't look that good. Intermodal is way down. Trucking is down now. Some of that was occurring before you got to the coronavirus. Some of that is year-over-year comparison because they had a blowout year the year before. So, but still, that's a place where things are very tangible. Not enough boxes, to put on the railroad cars.
But overall, the read you're getting is that it's a pretty decent economy?
Yeah, I would say, labor market has come in very strong. Consumption seems to be holding up well. Trade issues have now maybe moved to the back burner a little bit. So I think those kinds of issues are going to help us. Ag is an area that has been hurt by the trade issue. That should rebound in 2020. They've had a couple of bad years, so hopefully they'll do better this year.
Jim, I have to ask you about the Fed's liquidity and the effect on stocks. So some people out there believe that it was the turn to increasing the balance sheet, the repo operations, the injection of liquidity by the Federal Reserve into stocks that has created this recent run-up in stocks, along with the idea that if it's withdrawn, the market could be in danger. What's your take on that?
You mean not QE?
Exactly.
NQE? Yeah, I mean, we've tried to push back against this. It's not the intention of the committee that this is quantitative easing. We're buying Treasury bills, not the longer end of the yield curve. But here's what I would say about this. The Fed cut rates 3 times last year. If you think it was easier monetary policy that helped drive equities, you got it right there. That must have been it.
Not the liquidity injection.
So why do we have to go to this story about the implementation of monetary policy at the very short end of the curve? So I think for those that want to tell a monetary policy story, there's a clear one to tell for the fourth quarter and up to now for equities. And I don't see why you have to say, it had everything to do with this relatively minor operation on the short end of the yield curve.
All right, Jim's going to be with us for the rest of the hour. We have lots more to talk about. And Steve, we'll see you back here in just a little bit.
Okay, a few headlines to tell you about this morning as well. Wells Fargo reportedly now very close to a settlement with the Justice Department and SEC over previously disclosed probes into its sales practices. The New York Times saying the agreement could be announced as soon as today. Wells Fargo has declined comment thus far. Wells has paid out more than $4 billion so far in fines and penalties since it was revealed back in 2016 that employees opened millions of bank accounts without customers' knowledge in order to hit lofty sales targets. Take a look at shares of Chewy trading higher this morning after an upgrade from RBC Capital Markets. Analyst Mark Mahaney now has an outperform rating on the stock and a price target of $38. He cited 4 key points in his note, including highly favorable risk-reward and strong fundamentals. We'll talk about all of that. Still to come this morning, Huawei's warning to America about building a 5G network, plus a number of stocks to watch this morning ahead of the opening bell. Before we head to that break, take a look at the markets as we speak. You're looking at the Dow. Looks like it opened off about 133 points right about now. Squawk returns right after this.
Got a question for Warren Buffett? Now's your chance to ask. Tweet them to us with the hashtag AskWarren, and the legendary investor will answer them on Monday starting at 6 a.m. Eastern. Warren Buffett, live, right here on Squawk Box.
Want to know a quick, easy way to see if your favorite podcasts have a new episode available? Just go to the home screen on your TuneIn app to see the latest editions under the Your New Episode section. Happy listening.
Get social with TuneIn. Follow TuneIn on Facebook, Twitter, and Instagram to discover what's happening in the app and around the world. Be the first to know about upcoming games and the hottest new music. Follow @TuneIn and always be in the know.
Fidelity online U.S. stocks and ETFs are commission-free. And when you open a new brokerage account, your cash is automatically invested at a great rate. That's why Fidelity leads the industry in value, while our competition continues to talk.
Pain can wear you down, but you're resilient. And I see how lidocaine patch fuels your resilience. Powerful, targeted pain relief. Pain will not get the best of you. It will bring out the best in you. I see hot lidocaine patch. Options action. Strategies from the street's top traders. New opportunities to profit from the market's hottest trends. Options action. Today, 5:30 Eastern, CNBC. Sponsored by Thinkorswim by TD Ameritrade.
May 12th in New York. Game-changing healthcare solutions, smart investment opportunities. CNBC presents the industry's top minds with groundbreaking ideas that could transform the sector and create healthy returns. To attend, go to cnbcevents.com/healthy returns.
It is the most breathable underwear I've ever had.
Just try one. You won't go back.
Tommy John is comfort reimagined for men and for women.
We use soft, breathable, lightweight fabric with stay-put waistbands that never dig and stretch where you need it. We made a women's line so comfortable there are no visible panty lines and no wedgies, guaranteed.
Go to TommyJohn.com right now for 20% off and free shipping with the code on your screen. Tommy John, no adjustment needed.
Hey guy, welcome to HIMS.
Should have done it years ago, and I feel like the young stud that I always imagined I was.
Outstanding product. Works above and beyond our expectations.
Go to forhims.com/ED and get started with a free online visit.
We are KiwiCo, and we deliver hands-on STEM projects designed to inspire young innovators. Kids of all ages can explore science, engineering, art, and more. Get your first month free. Visit trykiwico.com.
I don't care if Monday's blue, Tuesday's grey and Wednesday too. Thursday, I don't care about you, it's Friday. Lord.
At least it is Friday if we have to listen to that. Anyway, let's get to Dom Chu. I heard it on Saturday last week after Greco played it like 6 times last week. Let's get to Dom Chu, who has a look at this morning's market movers.
You're not in love, Joe?
I am, but it's tough to it's tough to be in a bad mood on a Friday anyway, and especially with Bullard here.
It is kind of tough there as well.
I'm in love with Jim, actually.
It is a lot of good stuff. A lot of good stuff going on over there as well. Let's take a look, first of all, what's happening overall with shares in some food and beverage companies. We're going to start off with shares of Shake Shack. They are getting a bit of a downgrade here. Overall, you see Shake Shack shares moving lower after it gets cut by analysts, citing some of the concerns about what's happening overall with the overall scheme of their particular sales, so those shares off about 1.5%. Also now what's happening here with shares of Domino's Pizza, because we had a massive run yesterday, but they're off 1% right now. We have other analysts out here saying that Domino's Pizza's run and the valuation calls are now a little bit more tempered given what's happening. So Domino's Pizza, they're off as well. And then we're going to all wash it down with shares of Coca-Cola, which are off just fractionally on very thin pre-market volume after it warned that we could see a 1 to 2 cent impact on profits given the coronavirus and its concerns over there. So another company tempering some expectations with regard to sales and earnings growth given what's happening with the coronavirus. Still, Shake Shack, Domino's, Coca-Cola, food and beverage theme, Becky, they're all in the red along with the broader market. I'll send things back over to you.
All right. Thank you, Dom.
Sure.
In the meantime, Huawei's chief technology officer, Paul Scanlon, telling CNBC that plans by the United States to create a 5G rival to Huawei could be a challenge amid growing calls from lawmakers to find alternatives for its next generation networks. Washington has maintained that Huawei is a national security risk, alleging that Beijing could use the company's equipment for spying. Huawei has denied those claims. Scanlon says the technical standards and actual implementation of 5G have taken about 10 years to create. Jim, I know this is not your field of expertise, but do you have any thoughts on this security versus competitive risk that that Huawei may pose to the United States? Is this something you guys talk about at all at the Fed?
This is out of our bailiwick. It's long been a concern that, you're giving away state secrets when you trade. I think that, Kissinger's comments that we're in the foothills of a Cold War is kind of resurfacing these issues among people that didn't live through the Cold War and are not used to this kind of thing. But during that era, you would have worried about this, incessantly. And I think we're kind of creeping back into that in the current environment.
Fair point.
All right, coming up.
But on Huawei, well, we don't. We'll do it later. You're going to be here for a while.
Yeah.
So
I guess we got to go. Just 1 second, Gregor. Did you see? I didn't realize this. Who died though? Cy Sperling.
Really?
Cy Sperling, the guy who's Greco. Is he not tied to this show forever? I'm not just the president, but I'm also a client. And I just read about what his system that I was always accused of wearing, that his system, what it actually entailed. And it is a system. It's not just a toupee. Your own hair grows through and then they put more.
Like a week.
I'm just, preempting, just in case, just something you want to think about. Anyway, Cy Sperling dead at 78, and we'll hold on. We'll miss him. Here. We'll miss. Yeah, we both are. All right. Anyway, coming up, Cy Sperling. This was a shocker. I just opened this up. Coming up, linking Wall Street to Main Street, Morgan Stanley's deal with E-Trade sparking buzz among investors at more bank deals that could be made. We're going to talk about the financial sector in just a bit. And in just a few minutes, James Bullard's thoughts on the Houston Astros. No, not on the Houston Astros, but I'm going to ask you that off camera as a big Cardinals fan. The Democratic debates and the candidates' plans to keep America's economy growing. Squawk Box is coming right back.
Time now for today's Aflac trivia question. What was the most expensive wristwatch ever sold at auction? The answer when CNBC Squawk Box continues.
Good morning, this is your Southern service to London Victoria. Join in our onboard quiz. Here's our next clue. What sea sounds like a handheld party food but keeps you dry and protected from the rain? Not canapes, canopies.
At Southern Railway, we're investing over £7 million into making improvements for you, like canopies, cycle parking and new platform lighting across more of our stations. Find out more and book your tickets at southernrailway.com. Southern Railway, we're with you.
That's going to have to be taken in Beijing, which will affect the whole world.
John Fenby, we want you to fall back on economics, finance, and investment right now. You're expert on France, the lethargy of Europe as well. Let's call it Eurosclerosis. The yields are there. The negative rates are there. The yields are there this morning in the United States. What does the yield structure of Europe signal to you?
Well, that Europe is still pretty sluggish, it must be said. Eurosclerosis, I don't know that I'd go quite that far. And to link in with what we were saying earlier, of course, a lot of European companies are pretty dependent on components and inputs from China, not just in selling into China, but also in components in themselves. And the uncertainty, I think, that's around at the moment is going to put a premium on what are seen as safe havens. Gold, obviously we've seen the movement in gold, and that this will mean strength for the dollar still. And Europe is really floundering a bit, I think, in the present situation. Although there are some bright spots, French unemployment has come down to go to France, but Germany, which is the motor of so much in Europe, is really in a state of economic uncertainty and political, they don't know where they're going.
Just pouring through the data this morning, it's a great shame. You get a real sense that domestic demand in Europe was just starting to pick up before it's been smacked around the head by what is happening in China. Jonathan, I was looking through the PMIs, and they're really quite nuanced, and we pour over all of these different sub-indices, and delivery times lengthened in Germany, but when they calculate the headline number, the supply delivery times index is then inverted, and you end up in this really weird situation in Europe today where almost half of the index's month-on-month gain for German manufacturing was attributable to a deterioration in supply delivery times. It's pretty clear that we're starting to see some supply chain disruption, John. Can you assume at this point, would your base case be that Germany is heading into recession, or is it still too early?
It's still probably too early, but it's heading towards recession. I'd say towards rather than into recession. And the politics come in here because with the present uncertainty with the ruling party, the CDU, after Merkel, what's going to happen, her designated successor having stepped down, quite a nasty fight going on among other contenders for the leadership. We're not going to get any clear political decisions on the economy, I think. And although President Macron of France has high ambitions, France can't take up that German role. So we're in a real period of uncertainty, which, as you absolutely rightly say, the link with China, both China as an export market, but also, as I was saying earlier, China as a source, or a vital source in the European supply chain, is going to leave us in considerable uncertainty for months ahead and perhaps on into the end of the year.
It sounds like the next book, the next treatment from Jonathan Fenby. Thank you so much with T.S. Lombard. John, this really goes back to the movable feast, which is German politics.
Yeah, and a successor to Angela Merkel. We thought we had one with Angela Karrenbauer, and now we've got to find a new one, Tom.
Yeah, well, we'll have to see. Futures -10. The Bloomberg NJIT STEM report brought to you by New Jersey Institute of Technology, a top 100 national university, in the latest U.S. News and World Report college rankings. Learn more at news.njit.edu. Here's Bob Boone.
Tom, Jonathan, Lisa, good morning. Here's what's making news in science, technology, engineering, and math. Apple is considering giving rival apps more prominence on iPhones and iPads and opening its HomePod